The almighty Microsoft is trying to acquire the gaming giant Activision Blizzard for a huge premium to where the shares are trading today, which could present a large payout opportunity for investors at today's prices. But is it worth the gamble? Let's talk about it in today's video. What's up, everyone? My name is Ale. Welcome back to my world of stocks. So as you probably know, Microsoft is my #1 largest stock already, and I actually bought Activision Blizzard stock because of the acquisition deal. So naturally, I've been getting a lot of comments asking me for an explanation of the entire situation, what my updated thoughts are on it, whether I think the deal will actually go through, and how I feel it'll all play out. So that's what we're going to talk about in today's video. And I hope you guys enjoy it, by the way. But let's go ahead and start with a quick recap on the acquisition and what's going on there. We'll talk about how much it would pay investors at today's prices. And I'll also give you my updated thoughts on any recent developments on the deal and whether or not I think it'll actually go through. So let's go ahead and jump into it. Alright, now if you're not too familiar with the companies involved, Activision Blizzard is one of the biggest gaming companies in the world with the 9th most market share by gaming revenue. And while Microsoft is obviously much more diversified than just gaming, their Xbox division has helped them reach the 4th largest market share, even ahead of giants like Nintendo and Electronic Arts. And with this acquisition, Microsoft would actually shoot up to the #2 spot, at least by today's numbers, even ahead of PlayStation owner Sony and only behind the Chinese giant Tencent. To put into perspective how massive this deal is, Microsoft is willing to pay close to $70 billion for it in what would easily be the absolute largest acquisition of their entire history, even ahead of past giants like the ones for LinkedIn, Skype, Nokia, and more. Now, I'll come back to the acquisition in just a second to give you all the specifics, but the reason why Microsoft wants Activision so badly is because it would now make them the new owner of massively popular titles like Call of Duty, Warcraft, Overwatch, Hearthstone, and Diablo, as well as ownership of King Digital, which makes mobile games like Candy Crush Saga, which has been one of the best-selling mobile games of all time. In fact, when looking at the best-selling games in history, Overwatch, Call of Duty, and Diablo all make it into the top 22, while Minecraft is #1, which is already owned by Microsoft. And then when you look at mobile games, Candy Crush Saga comes in at #7 all time, just slightly below giant behemoths like Pokemon Go and Clash of Clans. And then when you combine all separate titles into game franchises, Call of Duty is the 4th best-selling game franchise of all time, only behind iconic franchises like Pokemon, Tetris, and Mario. So with all of that in mind, you can really see why so many competitors would be terrified at the idea of Microsoft taking full ownership of all of these IPs, because it's going to make them even more dominant and really hard to compete with in one of the biggest markets in the world, where there are over 4 billion people playing video games every year. That's like half the world's entire population that can be marketed to, and it's even still growing by around 5% this year, which is crazy to think about considering that this is coming off of the explosive growth during the pandemic. I would actually expect that growth to be negative right now, but it's somehow still positive. And a big reason why is because of mobile gaming in particular, which continues to outperform the best of all and already makes up more than half of the $200 billion that is generated from video game sales worldwide. So with the acquisition, Microsoft's gaming portfolio will be even more robust across not just console, PC, and mobile, but the CEO has even pointed to the deal multiple times for what it will mean for their expansion into the metaverse, where, of course, giant companies will be competing for consumers' attention, and gaming will likely play a huge role in that future of the metaverse. And so Microsoft is doing all it can to get a head start, and they really see this as a must-buy situation for them. They really want Activision. Now, At the time of the announced acquisition, Activision stock was trading at around $60 per share before immediately shooting up to around $80 when Microsoft made an offer to buy them out for $95 a share. Now, even at 80, it still had significant upside to get up to the 95, but surprisingly, the stock has actually declined over time, which is very rare to see. Usually when a company agrees to an acquisition, the stock will gradually go up over time until the acquisition fully completes. However, in this case, it's doing the exact opposite and declining heavy over time, as if investors are gradually becoming more and more pessimistic about the deal getting approved by regulators, despite the fact that there is now a massive 32% upside on the stock. That's huge, guys. So basically, just $1,000 bet would make you over $300. $100,000 bet would make you like over $30,000, and $1,000,000 bet would make you over $300,000 just from this one single bet alone. That's giant upside potential, especially in the horrible bear market that we're in this year. So why do investors fear so much that the deal may not go through? Well, for one, it's such a massive deal that there are regulators from not just the United States, but all around the world that have to approve it. In fact, one of the biggest pushbacks is coming from Europe, where the UK's Competition and Markets Authority recently finished their Phase 1 investigation of it and concluded that Microsoft may use its new control of popular titles like Call of Duty and Warcraft to harm their rivals, which is especially the case for Sony's PlayStation, who has been screaming about the acquisition, saying that giving Microsoft the power to make Call of Duty exclusive to Xbox in the future is too dangerous to do and would give them an unfair advantage. By the way, the reason why they care so much about Call of Duty in particular is because, again, it's one of the best-selling franchises of all time and carries a gigantic fan base along with it. In fact, the most recent iteration had the best-selling debut out of any Call of Duty game in history, and it broke multiple records. And remember when I showed you how massively large the gaming market is? Well, Call of Duty alone is so large that it literally generates over 1% of that entire market just by itself, just that one video game. Now, in counter to these protests, Microsoft has defended their deal by pointing out that Sony has made a lot of acquisitions themselves, recently acquiring 3 major companies of their own, while also noting that Xbox is currently the worst selling console. They are in 7th place in PC games, and they have virtually no global presence in mobile gaming either. And the CEO finished off by also saying, quote, "If this is about competition, then let us compete by, making these moves." On top of that, Microsoft has also come out and told regulators multiple times that they will not make Call of Duty exclusive to Xbox for at least as long as the PlayStation is still being made. They only want to include it in their Game Pass subscription service because at the end of the day, that's the direction that Microsoft is trying to head towards in terms of gaming. They want to become the Netflix of gaming and use their Azure cloud infrastructure to power cloud-based subscription gaming to as many people as possible. But they argue that these regulators are listening too much to Sony and are therefore being persuaded by Sony to block the deal because Sony wants to stay on top and really hinder Microsoft's chances of overtaking them as the video game king. I'm not going to get into all of the ethics of all of this. I'll leave that up to you guys. But ultimately, moving forward, all we can really do is speculate at this point as to whether or not the deal gets approved. But in terms of the UK specifically, now they've moved ahead into a phase 2 investigation that leaves them until March to make a final decision, which would be either to approve the deal, deny the deal, or offer solutions to the deal, which would be things like maybe selling only certain parts of the business or other stuff like that. On top of that, though, the European Union has now entered the ring as well, launching a deep investigation of their own that is also set to expire by March. And of course, there's still the United States Federal Trade Commission, the FTC, who is expected to deliver a decision as well by the end of this month. So that's going to be a lot sooner. Personally, from what I've read and researched, the most pushback I've seen has, I think, mostly been coming from the UK, but I would say that just overall, these are really the 3 regulatory bodies that I would keep an eye on the most, as they will have probably the most legal power, I would say, to block the deal. And again, all three of them should be done by sometime in March at the absolute latest. Until then, though, it's anyone's guess how it will all play out, but my gut tells me that I actually think that the deal will get approved. And I have a few different reasons why I believe this. First of all, we've been going through a giant stock market crash this year. So Activision stock being purchased for $95 is probably around double the price of where it would otherwise be trading today if it wasn't for this purchase. And I think Microsoft could have actually saved a ton of money if they would have just waited for Activision stock to crash, and then they could have made a much smaller bet on it. So that alone may be good reason enough to just kind of let the deal go through because they're paying such a giant premium. I mean, Activision even reported a 25% revenue decline through the first half of this year. So I can almost guarantee you that the stock would have been destroyed just like most other gaming companies out there if they weren't being acquired. Like, for example, Take-Two Interactive, who makes the popular games Grand Theft Auto and NBA 2K, well, they lost half of their entire value so far this year. So they've been getting creamed. And I'm not the only one that thinks that the deal will probably get passed. Microsoft's head of gaming, Phil Spencer, has said many times that he believes the deal will get approved. Microsoft's CEO has also stated the same thing and feels that it will get approved by summer of next year. So that's kind of a time frame. If you guys are looking for a time frame, Microsoft CEO says probably by summer of next year. And then on top of that, there's even analysts that seem to agree with this too, as they not only have an average price target on the stock that is right near that acquisition price, it's right next to it. So the average analyst thinks that the deal will probably get done, but even the lowest targets that imply the greatest risk, well, they're still above the current share price of Activision at around 78 versus 71. So even there, at the lowest targets, there's still quite a bit of upside. And on top of all of that, even the great Warren Buffett has made a giant bet on the stock as well in recent quarters, buying so many shares that he would literally make over $1 billion of profit if the deal gets approved. And by the way, Buffett was even buying the stock before the acquisition was even announced. So he liked Activision as just a regular stock on its own when it was trading in the 60s. But since then, he's been buying it at much higher prices than that because he thinks the deal will get approved and he ultimately wants to sell it for 95. And if the deal gets declined, then he has stated that they would have to reevaluate the situation and consider holding the stock long term. But I think that's what a lot of this could probably come down to if you're someone who's thinking about buying the stock. Are you willing to hold on to it long term if the deal falls through and the stock crashes and you're left down a giant amount? Because if you hold it long term, maybe it recovers and then maybe you actually don't lose a lot of money and you can mitigate some of the risk that way. Personally, I actually do think that the stock can recover long term even if it crashes here from the deal getting declined. Because first of all, Activision was actually trading higher than the acquisition price before the deal was announced. In fact, it was even higher than $100 per share at the start of last year. Now, sure, that price was probably way overvalued because of the tech bubble, but that's still around 30% higher than where the stock trades today. So it's not too crazy to think that the stock could recover after another crash if the business does well over the long term. And in my opinion, I think it probably will. It's clear that they have a ton of hit games since Microsoft is willing to pay so much money for them, and while sales were plummeting at the start of this year, they're already starting a giant recovery. Not only is the revenue drop expected to only be around 3% for the full year, but the following year it's expected to soar by almost 20% positive. And keep in mind that this is despite the fact that they already saw gigantic growth on both the top and bottom line in 2020 and 2021, reaching record highs. And look, at the end of the day, you at least know that one of the biggest, most well-run companies in the world in Microsoft was willing to pay $95 a share for them. So that's what they think that Activision is worth. Not to mention that there's also huge future acquisition potential still, because even if a deal doesn't get done now, maybe it gets approved at a later time in a different situation. Overall though, make no mistake that Activision Blizzard stock will almost certainly crash by a very large amount if the deal gets denied, and that alone makes it a high risk but still a high reward potential type of play here. Personally, I only bought a few shares of Activision Blizzard stock. That's all I'm willing to bet on it, an amount of money that I'm comfortable losing if the stock crashes because the deal gets denied. Going forward, if that were to happen, I'm not sure yet if I would be willing to hold on to the stock long term. I'm definitely open to the idea, but even after a crash, I still think that there's probably going to be better options in the market just because so many amazing stocks have crashed by giant amounts this year that I still think I'd rather have that money in something else. But I'm open to the idea. I'm kind of 50-50 on it right now. But overall, this is really just a short-term gamble for me, and it's with a small amount of money that I'm comfortable losing, losing a decent amount of if things go badly. So that's how I personally feel about it. I think you should be cautious with this one. I think it is high risk, so you should exercise a lot of caution just like I am. But let me know how you would play it if you are deciding to make any move here. Ultimately, it's your decision. You gotta evaluate it for your own personal situation and make your own call on that. But let me know what you're doing, if you're doing anything at all. I'd love to hear your thoughts, and we can have a chat down in the comment section. But thank you so much for stopping by. Hope you're all doing well, and I will catch you in the next video. Take care. Bye-bye.